Hello and welcome to the Data Explorers Securities Lending Daily Update. I'm Will Duff Gordon. Firstly, on to some regulatory news. The FSA is to continue with its requirement for people to disclose short positions greater than 0.25% of a company's capital, only when these short positions are in financial stocks. They will also have to issue further updates when their short position changes in increments of 0.1%. That said, the ban on shorting UK financials is lifted from the 16th of January. On to some company news. The Financial Times has been reporting, as has everybody, that Steve Jobs will take a 6-month leave of absence as chief executive of Apple. Property concerns over his long-term health and the likely fortunes for his company, which was down around 10% on Wednesday. As you can see from this chart, there's been some short covering in Apple, and people seemingly closed out their short positions prematurely in this security. The short interest reached its high in early December. It's been coming down since. That said, the shorting was never sort of enormous and is currently only around 1% of the shares outstanding, having come down from about 2.3%. The company's share price has fallen from $180 to $80 over the last 9 months. Separately, if we go on to the American retail sector, an interesting security here is Tiffany's, who've cut their profit forecast again yesterday after Christmas sales fell 21%. Shares of the S&P 500 fell nearly 7%. So shares of the S&P 500 listed stock fell nearly 7% on the statement, and the firm dropped its earnings forecast. Tiffany's has 12% of its shares outstanding being shorted, which is up from 8% from the beginning of 2008. Utilization is also pretty large, at 45% of available shares. The company's share price has fallen from $50 to $20 between June and now. In the UK, dismal Christmas trading added to JJB Sports' troubles as it announced a potential £10 million loss. The current CEO, Chris Ronnie, now looks to be having a difficult job on his hands, especially as it emerged last night that his major 27.5% stake in the business was seized by the collapsed Icelandic bank Kaupthing. JJB currently has 10% of its outstanding shares short, which has doubled up from 5% in October. Utilization is at 55%, up from 40% a fortnight ago, and the share price has fallen sharply from £1.30 in the autumn to 10p now. In Europe, an interesting security to talk about, a topical one, is Deutsche Bank. The Wall Street Journal reported yesterday that it's warning of a deep loss, blaming its trading misfires, forcing it to take a €4.8 billion loss in the fourth quarter. This, says the Wall Street Journal, reflects how badly the world's biggest banks fared in the weeks following the demise of Lehman Brothers. In terms of the short interest, Deutsche Bank has seen a rise of late, up from 4% of its shares outstanding to 9%, so more than a doubling of the short interest since middle of November, whilst the share price has been falling from €65 down to 25, with utilization at 50%. That wraps up today's briefing. Thank you.